Good start to the week for the buyers in the grain markets. Short covering helped pull prices to the upside as the markets search for details of importer demand for U.S. crops. The cattle complex had a lower start to the week, and lean hog futures mixed with strength in the back month futures.
Live from the land flowing with meatloaf and pie via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with the Water Street Wunderkind from Zaner Hedge, Ted Seifried, and later Cary Artac from artacadvisory.coom. Directly following the news, Jack Scoville from the Price Futures Group. I'm the handsome newsman, Davis Michelson, and now say hello to the host of AgriTalk, Chip Flory.
All right, I think that's an apt description, the Wunderkind.
The Water Street Wunderkind.
I love it. I love it. Welcome to AgriTalk. I'm Chip. Glad that you are with us on this Monday afternoon. Dreary.
Oh.
And I love it.
Okay.
I love it. It's only like 43 degrees. I stepped outside. 43 degrees feels cold again.
You get your slippers and some cocoa immediately, I'm assuming. If I know you, and I think I do.
I mean, of course. It's an immediate hand, arm's length away. Yes, absolutely.
Not a boy. I've got. I'm looking at my computer here. It gives a little temperature there in the middle of this of the screen, and it says temps to drop. That's all it says.
Yeah,
that's rather ominous.
Yeah, exactly. The arrow is pointed down on my little dashboard as well, the little weather dashboard. But 43 degrees right now and getting chillier. I think the thunder and lightning have moved on.
Okay.
I don't think we're expecting to see much more of that here in Northeast Iowa, at least for today. There's another chance later in the week. When everything is said and done, as we were talking with Brett Waltz from BAMWX.com this morning, there's a chance for an inch of rain in Northeast Iowa this week. We will take that.
Roger that. Yeah, absolutely.
Yeah, no doubt. Ted Seifried is our guest analyst today. Got a chance to see and talk with Ted down in Houston at Commodity Classic last week. So I want to get his impressions of, the conversations that he had with producers while he was down there. What did they want to talk about, and what kind of questions did they have for Ted down there? So we'll get to the bottom line of that, okay?
Yeah, that sounds great. I can't wait.
All right, let's get to the news. What do you got?
Well, chip delivery period issues resulted in a widely volatile day in March wheat futures, but back month futures favored the upside, with spring wheat and hard red winter wheat futures leading the way to the upside. Short covering gets much of the credit for the strength in the market. Export inspections of wheat in the weekend of February 29 totaled just over 353,000 metric tons, and that was at the low end of trade expectations. July soft red winter wheat futures spiked support at 560, then recovered to close above the opening range. July HRWD wheat futures were 11.5 cents higher, all told 567 at the close. July SRWD wheat up 6 cents, 567.25. July spring wheat closed at 662.75. That's up 14.75 cents, Chip.
Buying dips in the wheat market right now. That's a huge change in attitude in that wheat trade, no question about it, and should prove a little more positive going forward.
Export inspections of corn weekend at Feb 29 totaled nearly 1.084 million metric tons. That was in line with trade expectations. USDA this morning also announced the sale of 110,000 metric tons of U.S. corn to Taiwan for delivery in the current marketing year. There are also rumors that China has been booking corn from the international market. Traders report high confidence in reports that China booked 10 cargoes of Ukrainian corn last week, and there is speculation China bought U.S. corn last week as well. May corn opened fractionally lower and on session lows, then spiked resistance at Friday's high before pulling back to a high range close. May corn futures 5.25 cents higher, 4.30. July corn up a nickel, 4.41 December corn futures closed at 4.63, up 3.75 cents. Got the arrow pointing the right direction, Chip.
Right. But I would guess that if we don't get some of those export sales announcements by the middle of the week, the market's going to show a little bit of frustration at some point.
Yeah, I wish I wouldn't have mentioned it then.
Yeah.
USDA this morning reported soybean export inspections in the weekend at Feb 29 of 1.021 million metric tons, in line with trade expectations. USDA also announced a daily sale of 126,000 metric tons of U.S. soybean meal to unknown destinations. That sale includes delivery of 30,000 metric tons in the current marketing year and 96,000 tons for delivery in 24-25. AgriTalk says 48% of the Brazilian bean crop was harvested as of last Thursday. That's ahead of the 43% harvest pace at this time last year. May soybean futures traded above $11.50 for the entire session for the first time since my birthday, February 22nd. May beans 3 3/4 cents higher at $11.55. July beans up 4 cents, $11.65 1/4. November beans closed at $11.46 1/4, up 6.5 cents, Chip.
Yeah, also the International Day of Davis, right?
That's right. That's right.
Yeah, that's exactly right. Good progress being made on the harvest down in Brazil, and there's still a lot of beans that need to be hedged in the system.
Yep. Well, it looks like we've got July cotton 40 points lower today at 93.37. Let me swing through these closes quick on the livestocks. April fat cattle $1.77 1/2 lower at 186.67 1/2. June futures down $1.42 1/2 to 182.57 1/2, and April feeder futures off $2.25 to 255.75. And on the snout side, April lean hog futures $1.80 lower, 86.27 1/2. But June hogs up 7 1/2 cents to 102.12 1/2. Chip.
Yeah, thank you, Davis. We're going to have to talk about what's going on in the cash market, in that feeder cattle market as well at some point, because holy smokes, that thing is on fire and red hot in some areas. It's pretty hard to believe some of the numbers that are getting tossed around out there. Okay, buddy. Thank you. Let's bring in Jack Scoville, Price Futures Group. How you doing, Jack?
I'm doing fabulous. How about yourself?
Well, I'm doing just all right. Glad to hear that you're doing so well. What do you make of the markets?
Well, I'm kind of encouraged by the price action today. It would have been nice to close a little firmer, but when you look at the daily charts, it does look like we're trying to swing things up. And given the fact that we've kind of run out of bad news, I suppose some type of a small short covering rally is in order. Don't expect it to go very far. We don't have a trigger to send this thing to the moon or anything like that. Demand's still kind of subdued, and there's still plenty of supply, but that all seems to be part of the market now, and looks like maybe the funds are backing off a little bit.
Yeah. About half of the Brazilian bean crop has been harvested, Jack. Are they moving it on to the market?
I don't think that they really are. I think there was quite a bit of movement early in the year. I did a lot of selling early when prices were higher, but now the prices are down here. I'm having hardly any orders from Brazil.
Yeah. It's one of the crazy. It's showing up in a lack of truck movement down at the ports, on the highways, just in general. There's all kinds of evidence that bean crop is not moving right now, isn't there?
Yeah, that's what I understand. It really isn't. Everybody, my guys call me up and they say, "Yeah, we're going to get you some business here. We're going to get you some business," and it never really shows up.
Yeah.
And I think you can put that down to low prices and low production.
Gotcha.
You got the Brazil producer has a two-way whammy going right now.
Yep, no doubt. Good stuff, Jack. Thanks, my friend. We'll talk to you next week. Jack Scoville, Price Futures Group. Ted Seifried from Zaner Hedge up next.
The truth is hard to come by these days, unless you listen to AgriTalk.
Welcome back to AgriTalk. I'm Chip Flory. Glad you're with us. Ted Seifried, Zaner Hedge, is our guest analyst today. Ted, sounds like you found your way home from Houston, huh?
Yeah, buddy, I sure did. Although
Good.
I was really enjoying my time down there. Could have stayed a couple extra days, I feel like.
Yeah. Yep. Heck yes. Why not?
Right?
Sounds like a lot of people had a lot of fun down there in Houston at the rodeo and everything. So it was a heck of a gathering. No doubt about that. What'd you learn? What did you learn from the conversations that you had down there?
Was very curious to talk to guys about what their thoughts were on how the current weather that we're having is going to affect our planting season,
Mm-hmm.
potentially growing season, things like that. I think I had a pretty good idea of how people felt about the markets. That was confirmed, by the way.
Yep.
not,
Yep.
not a whole lot of you know enthusiasm about that, I suppose.
Yep.
But you know, when I think about the weather, and I'm going to preface that by saying, last week we had a tornado go through Cook County for the first time ever in the recording of such things.
Yeah.
And that's just kind of how February was, and we've
Yep.
started March the same way. It's multiple 70-degree days, things that just are very, very unusual. And it really does make you go back and think about the one year we don't really like to talk about all that often. But it makes you think about, 2012, right? I mean, there were some very similar sort of weather things going on. That was we had the thunder snow and lightning and these big rainstorms coming through in February. So you wonder about that. But the fact of the matter is, we're warm, and it has been allowing for a lot of early spring field work. It's getting people very optimistic about planting rather early.
Yep.
And what does that mean, right? I mean, should we be thinking, wow, this could be a very difficult growing season, and we could be sharply higher, maybe right back to the prices that we've been enjoying the last couple of years? Should we have that sort of optimism? Or should we say, well, historically, when we have early planting, that means two things. One, it might mean more corn acres. And
Yep.
two, it means good potential for yields if we do get more normal weather after we get done with planting and throughout the growing season. So, if you think about what happened in 2012, man, we were under a lot of pressure from early planting and warm,
Yeah.
dry weather until
Yeah.
we got to the end of June into 4th of July kind of weekend is where things really took off.
Right.
But the market was under pressure at first. And I think that's the takeaway that we have to have for now is that, while it's not out of the realm of possibility to have a very difficult growing season, but the early planting probably is going to be a bearish factor for the market for a
Yeah.
little while.
I agree. I agree that it would be, and even if we were sitting here, Ted, with a weather forecast calling for above normal temperatures, below normal precipitation, so, which is
Right.
kind of out there,
Mm-hmm.
at least for the early days of the growing season. It I gotta believe that the market and traders are gonna be kind of numb to that.
Yeah.
After what we went through a year ago, it's going to take some serious crop issues into that time frame that you were describing. Just call it the 4th of July before the market's really going to respond, isn't it?
Yeah, right. And I've been using the term jaded. At some point
Okay.
we get kind of jaded to
Yep.
weather just because, last year we tried three separate occasions to have, a weather rally, hot and dry, so on and so forth, right? I mean, it didn't rain March, April, May into the first 10 days of June. We rallied then it rained, then we broke, but then it got hot and dry again at the beginning of August. We rallied then again. But each time we rallied, it fell flat on its face. And ultimately, a 177.3 national average yield in corn after
Good
what I
Lord.
think most of us would agree with being maybe the most difficult growing season we've had since 2012, weather-wise. Wow, that's pretty incredible. Now, I'm
Pretty
going to say I
amazing.
think a lot of it from last year, a lot of it was timing. I go back to crop tour last year, Chip, and we were on different legs. I went east for the first time in a long time. I was listening to what you were saying. I was listening to all that. And I know that you were very concerned about what the forecast had going forward,
Yep.
and that you were taking the raw data, as you do every year, right? Taking the raw data and then putting your adjustment on it based on what you see from a weather perspective and so on and so forth. And something that we had been talking about a lot was that there's a lot of ears drooping. But for my money, I was sitting there thinking, going, this is probably the most complete crop, most finished crop that I've seen in the third week of August in my almost 10 years of doing this now. I don't think weather going forward is going to have that big of an impact aside from how much it's going to cost guys in LP. I really thought we were looking at a pretty much finished product, more so than what I've seen in years past. And so I don't know. I kept my yield estimate around a 176, and it still beat that, right? So I don't know. I don't know what it takes. Well, I think it's possible to have weather issues, and I think it is still going to be. We're still going to trade weather markets and things like that. But man, we've gotten it down to a point where if you get some timely rains, even if it's not as much as you think you need, wow, we can really still have some very, very good crops.
Oh yeah. Yeah, we can't forget that Pro Farmer, when things wrapped up a year ago, estimated a record national average corn yield.
Yeah.
It right. just wasn't as big as what some people thought it might be coming off of that. It was still a record yield, and that's what we saw. We didn't go enough to the upside, but it was a record yield. And what I remember the most of when talking about the markets and the potential reaction that we might see to these crops was I checked with a few people, more than a few people, about mentioning a $3 handle in corn, even last, during crop tour a year ago. And basically we had to say this is a real possibility that we could see a $3 handle on corn. Well, it happened for a very short period of time, but nonetheless, we did see that. And so the market has been absorbing and digesting this quote unquote better than expected for a long time, Ted. How much longer do we have to do that? Could corn ultimately rally out of this?
No, you're absolutely right. I mean, that's a great question. And I think I heard Jack Scoville mention that too, right? I mean, have we absorbed all of the bad news for now? And I think there is something to be said about that. We talk about, funds, although they're not there anymore, or at least they backed off on corn a little bit, but, funds are very, very short, record shorts, so on and so forth. Will they keep adding? And I do feel like most of the bad news is behind us. I do think that, things can start to get a little bit better. I do look at the forecast for Brazil and Argentina later on this month and into next month. And I think there's some reason why we might want to add some weather premium. But I'm also going to say that you haven't really seen the capitulation from the other large seller out there, i.e. the U.S. producer. We are still sitting on a whole lot of old crop corn and beans, more corn than beans, but we're sitting on a whole lot of old crop. And I don't feel like we're that aggressively sold for new crop yet. Right. So if we don't get this rally, if we continue to have these sort of fits and starts that we were seeing last week, and to some extent we had here today, especially in soybeans, and we get another round of selling pressure, at that point, do you have that sort of throw in the towel mentality? Are you going to see a whole lot of cash bushels move, not just from the American producer, but you were talking about it with Jack as well. There's a lot of bushels in South America that are going to need to move, and that will have to happen at some point. So does that selling happen first? Is the market going to get those bushels with the stick rather than with the carrot? And that's the thing that I've been really wrestling with here, throughout the attempted strength that we had last week and the strength that we had today. I'm worried that the market's going to accomplish its goal by inflicting pain rather than offering premium. You know what I mean?
Interesting. Yes. Yeah.
I hope I'm wrong. I hope that's not what happens. And
we kind of have to get into a market. We have to get into the market where we hear more than once, the beatings are going to continue until morale improves.
Yeah, I know.
And we haven't even been through one of those yet in a big bad way. And it just, I hear what you're saying, Ted. The market's job is to hurt as many people as it wants to.
Yep, and it's hard. We're harder to hurt people this year because of the success that we've had the last few years. So keep that in mind as well.
Yeah, that's right. That's right. Okay, importers. They're showing some interest in U.S. supplies. I want to talk about some soybean shipments coming up next here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 11 1/2 cents higher at 5.67. July SRW wheat up 6 cents to 5.67 1/4. May corn futures were 5 1/4 cents higher at 4.30. December corn futures closed at 4.63. That's up 3 3/4 cents. May soybean futures 3 3/4 cents higher at 11.55. July beans up 4 cents to 11.65 1/4. July cotton was 40 points lower at 93.37. On the livestocks, April fat cattle $1.77 1/2 lower at 186.67 1/2. April feeders down $2.25 to 255.75, and April hogs $1.80 lower, 86.27 1/2. Get more market news every market day. Visit tryprofarmer.com.
Do it.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk.
Welcome back to AgriTalk. We are in the middle of a conversation with today's guest analyst, Ted Seifried from Zaner Ag Hedge. Ted, let's talk about demand side of the market here for a bit. We've talked weather. We've talked about dealing with last year's better than expected and how much longer we're going to have to deal with that. But the demand has got to come into the market at some point. Talk to me about bean demand.
Yeah. Hey, listen, we've had a pretty good string of soybean export inspections, today being another example of that at 1.021 million metric tons. And again, the week before was right around the same number, maybe just slightly higher. And that's great. It's really nice to see that. The problem is that we're not seeing the sales. You look at the last 5 weeks of sales, and man, they've just been really disappointing. We had a marketing year low 2 weeks ago, which this is not the time of year you want to see that. No. And then last week, we really barely rebounded. We had a little bit of a better number, but it was still just not good. I mean, this is the time of year where we still want to be enjoying our export window before Brazil comes in and takes over. And so I don't know, I want to be encouraged by the inspections numbers, the actual shipments numbers. A lot of time, we talk about how the shipments numbers might be the more important number, but there's also sort of the, you can't ship what you haven't sold, Chip. And we're going to be running into that sort of, concern is going to be growing the further we go without seeing some of these sales come onto the books. And if I look at where we're at with outstanding sales, and this is based on last week's numbers, we'll get another, refresh on Thursday, but we've got a little over 6.3 million metric tons of unshipped sales. It's about 1 million metric tons less than where we were at this time last year.
Okay.
And we were shipping pretty aggressively this time last year too. So that's a bit of a concern. Right.
Yeah.
We need to see those sales. And you can talk about all the issues with Brazil's growing season until you're blue in the face. And we can talk about what the USDA is going to say on this Friday's WASDE report as far as that Brazilian production number. We're all arguing. A lot of us are arguing that it should be lower. I heard a higher number while we were down at Commodity Classic, though. But,
Stone came with a bigger number. Yeah.
Right. But also still not bigger than the USDA. They're just bigger than their last month's
right.
or
their
last
right.
time.
That's right.
Right. So I think we were all going to kind of maybe agree that the USDA could lower this number. But if China and other, mostly China, but if they're not coming in and buying US soybeans, Well, does it have any effect on our domestic balance sheet? And therefore, does it have any big effect on our pricing going forward? And that's the concern. So we got to see the sales need to start to come back to us. And if we can see that, then I think you do have a lot of reason to say, all right, maybe the worst news is behind us for now in soybeans. And then maybe we can get this fund short covering rally, because the funds last week, while they had covered some shorts in corn, they're adding in soybeans.
Yeah, exactly. It gets around to the old question about, is it really a drought in Brazil if it doesn't turn into more demand for U.S. beans? And it maybe has turned into a little bit, but not near enough. Not near enough to make me really concerned about the global supply of soybeans, which is where we need to see the concern focused. If it gets to the point that importers all of a sudden have decided, I need to get cover, and I need to get cover right now because we don't know what's coming out of Brazil, then it turns into something. But as of right now, it's not.
And it's kind of shocking that hasn't happened, to be honest, right? It really surprising. And if you look at, we always like to play the game of, what are we on pace for and so on and so forth. Well, in my book, we're on pace to fall short of the USDA's export estimate for this marketing year by about 35 million bushels. And if you add that onto the current balance sheet, I mean, we're talking a 350 million bushel carryover. You don't want to see that, right? But why hasn't Brazil come in and bought more with all the talk of problems in South America? Now, I will say that, why hasn't China come in and bought more in Brazil? Yeah. But I will say China knows about that Brazilian crop probably a lot better than you and I do, Chip. They've got guys on the ground there. They pay a lot of money for intel. They probably have balloons flying around. Yes. Army on the ground, balloons in the air, whatever they need, they are doing it, right?
Yes.
So maybe they're telling us that, the concern isn't there. Maybe it's maybe they're saying, hey, this is a lot like the U.S. growing season where everybody thinks it's terrible, but it's really not that bad. Or maybe there is a fundamental shift happening with the Chinese demand for soybeans, and this is the bigger concern that I have. I know other people. I know people have heard me say this before, but man, for the last 6 years, China has been saying that they want to change their feed rations to a more normal mix of soybean meal than what they had been feeding. They had been feeding just this crazy amount of soybean meal because they like fatty, marbled pork, like we like our steaks, Chip. But the problem is that means for them, the problem for the Chinese government is that means that they're dependent on a lot of soybean imports. The problem for the Chinese consumer is that pork prices are high. So when they get into a period of economic uncertainty or a downturn like they have been in, well, that means that pork demand drops because they're not willing to pay the higher prices. And it means the Chinese government can push that agenda to get away from that dependence of soybeans and to lower the soybean meal portion of that feed ration. And I think that's what's happening. And if that is the case, and if that is a permanent change, we might be staring down the barrel of the first time in any of our careers where we're seeing a realignment of Chinese soybean demand, where it will potentially drop significantly over the course of the next few years, or maybe already has. And that's not something any of us have seen before. We've all been so used to the idea that Chinese demand is just constantly going to either be there or be better year after year. We've never seen a 20% decline. Right. And that might be the case. If that happens, oh no, wow, that's going to really, really reverberate through the world of agriculture, not just American agriculture, but certainly South American, everybody. This is going to have to be a fundamental change, right?
Well, that would be especially true with the change that we're going through in the U.S. market.
Right. Absolutely. Well, it would actually kind of play into that longer term, right? And one real quickly before I get into that, one of the hints that I think we can see from China that this might actually be happening is they've imported a record amount of corn for this marketing year after what they say was a record corn crop for them. Now, I'm not sure it was a record corn crop for them, but I don't think it was a disaster either. Right. So what are they importing all this corn for? Well, I think it's because they are they're using the corn in the feed ration a lot heavier than what they had been. And that's taking the soybean meal out. But yes, sustainable aviation the domestic use of our soybeans for the crush for soybean oil, that is the next thing for us, and that's going to be great. The problem is that we can't increase crush capacity fast enough to offset a potential loss in exports over the course of the next few years. And it may have to be a very uncomfortable period of time for us to really, or for the market to really encourage crushers, these the big institutional crushers, to expand that capacity fast enough, or to expand it enough to take that demand away from what is lost in exports, right? So ultimately, it's going to be a good thing, I think. But we might be going into a couple of years of depressed soybean prices, because that's what might be needed to get that crush expansion that ultimately I do think we need.
Right. And then Chevron, just this week, taking some money out of in the last few days, taking some investment money out of the refinery business on the renewable diesel. That is a move I did not expect to see, Ted.
Yeah. And you wonder why, right? And you wonder if that decision was made back when we were at, $14, $15 beans, or if that is just something that they're not really buying into the whole sustainable aviation wave. I don't know. That was a very curious thing, but it doesn't leave you with warm and fuzzy feelings now, does it?
No.
Right?
No. Especially when bean oil is at 45 cents, you would think they could make diesel out of it all day long.
You would definitely think that, right?
Yep.
Unless they think that, eventually it needs to be 35 cents. I don't know. I didn't like seeing that. I worry or wonder about what that means for the future. I do think there's a lot of validity in the application of soybean oil for sustainable aviation, for biodiesel, for all of that. It's just the profit margins have to be there. And they've been good, but they, I guess, could be better. And maybe that's what the markets are going to need in order to get that big shift of demand away from the dependence on exports and more towards domestic use.
Okay. Less than a minute here, Ted. Get us ready for Friday's supply and demand report. What are you watching?
The first thing that we're going to look at is South American production, and certainly going to be that Brazilian soybean estimate. And then the big question after that is, if the USDA does finally drop the Brazilian number to, say, like a 152, what does that mean for the global balance sheet? Do they take that away from Chinese demand and then leave our exports unchanged? Because between the export sales numbers that we just talked about and a potentially smaller Brazilian number, I have a hard time with what the USDA would do with that. I mean, because I on one hand, I'd want to increase our exports on a lower Brazilian number, but on the other hand, if I'm not seeing them in the form of sales, I have a hard time doing that, right? So I don't know. That's going to be it's going to be interesting to see how they work with that. The other thing, very, very quickly, is that, everybody wants to see that lower Brazilian number. You wonder if the USDA realizes that they've had to increase Brazil's production after the fact for so many years in a row now.
Yeah.
Maybe they're realizing they were underestimated coming in, which is why they haven't dropped it as much as we've wanted to see.
Gotcha. You're the best, buddy. Thanks, man.
Always a pleasure, Chip. Thanks for having me, man.
Take care, guys. Ted Seifried, Zaner, Hedge. Cary Artac is next.
Knowledge is power. We're here to charge your batteries. AgriTalk.
Welcome back to AgriTalk. I'm Chip. Glad that you're with us on this Monday afternoon. Good conversation with Ted there, Davis.
Oh, man. Good to hear from Ted. Always good to hear from Ted.
Yep, absolutely. Absolutely. And some of the uncertainty that he was talking about among farmers and what exactly they are doing with remaining old crop and what the plan is on new crop, those are some answers that we need to get to.
Mm-hmm. Absolutely.
The idea here is let's have a plan. Let's at least get control of the 23 crop. If you feel like you are holding too much of that 23 crop, man, have a conversation with somebody. Figure out what you can do to relieve some of the pressures of holding that physical commodity and transfer the risk. Give the risk off to somebody else. and potentially reopen some upside potential, either with a call option, minimum price contract, buy it back in futures, do something, but you get to the point that you are comfortable with the 23 crop sales, right? You got to do that before you can move on and do a good job of marketing on the 24 crop. Okay. Cary Artac, Artac Advisory Service joins us right now. How you doing, Cary?
I'm doing great, Chip. How about yourself?
Doing real fine, real fine. Let's take a look at the charts. Get us started with May corn.
Yeah, May corn. In early January, I had a sell signal for the broader corn market when we violated 460 area. And that anticipated 412 and a quarter as a 2 to 3 month objective. We tested 412 and a quarter actually a week ago today in the May contract. I think the low was 408 and 3/4. We did not close below it. I'm considering it a hold. And from 412 and a quarter, we can and should rebound. We're in the midst of it anyway, up to 443 and 3/4. We might actually see that level by the end of the week. 443 and 3/4 is a descending 2-month channel top that actually maintains the bearish momentum following that sell signal in early January. And so it can hold into later March from 443 and 3/4. We could fall back to 412 and a quarter, rebound from there back to that channel top again. But if we can close above 443 and 3/4, I do see meaningful recovery as we move through March. The 460 level, then likely within 2 to 3 weeks. That's going to be a trouble spot. But I do think that if we close above 443 and 3/4, we could reach 490 within a month or two of doing so. That is a significant ceiling of resistance at 490, dropping gradually. It's about a 6-month channel top that could contain seasonal buying pressures, which is to say into summer trade. And if we can close above that point, and I'll be mentioning on your show, I see the summer rally afoot. And I'll give you the upper price points at that time. But okay. 490 would be an objective within a month or two if we can close above 443 and 3/4. Downside, it's all on 412 and a quarter. If we close below 412 and a quarter, we enter another phase of longer-term price erosion. 343 and a quarter then expected within 2 to 3 months of closing below 412 and a quarter. May soybeans, very similar dynamic. We had an early January sell signal below a 3-year channel bottom that's well above the market right now at 1270 even, anticipating 1090 even as a 3 to 5 month target. We closed today at 1155. We do, like corn, has a 2-month channel top coming down at 443 and 3/4. May soybeans also has a 2-month channel top coming down at 1182 and 3/4. This is on the weekly chart, so it drops every week. It can absorb buying through March, below which the bearish momentum following that early January sell signal remains firmly intact. That 1090 even area, that's a 3 to 5 month objective, likely to be realized by the end of April. But if we close the week above 1182 and 3/4, and it is possible, 1225 even likely within 2 to 3 weeks, and we could make our way all the way back to that 1268 even level within a month or two of closing above 1182 and 3/4. And finally, April live cattle. I've got a target I've had for a couple of months now. It's climbing. It's a former 1-year channel bottom at 193.35. It is expected over the next 3 to 5 weeks above 183.52. So 183.52 climbing trend support, able to contain selling through March, above which that 193.35 objective is likely to be realized by the end of March, where we could top out actually through spring. Downside, if we close below 183.52, that actually reverses momentum. And over the next 1 to 2 months, I would anticipate 173.80, where the broader market could actually bottom out into summer. In terms of the upside, if we test 193.35 and don't back away and then close above it, I see another 10 handles north within a month or two to 203 even. That's a significant 3-year channel top that I see no trouble containing longer-term buying pressures, which is to say through the rest of the year. But right now, it's a battle between 183.52 support and 193.35 resistance. 193.35 is the more significant of the two, where we could actually top out through spring. And that's pretty much all I got today, Chip.
Excellent. Excellent. All right. Don't forget, go to artacadvisory.com, ARTAC advisory.com, and look for the 2-week free trial button, and Cary will get you started there. Good stuff, buddy. Thank you so much.
Take care now.
All right. Cary Artac. Davis, I'm looking for an update on the weather, and we're not really getting it, are we?
Updated as of yesterday. Apparently, they're busy over there at the National Weather Service today.
They must be trying to get things all put together. Well, we talked with Brett Waltz from BAM WX this morning. The trend on the temperature is expected to remain positive in the week ahead. We are looking at one of the more active weeks that we have had for quite some time. Some rains in the middle of the country. We had rain and some thunder showers in northeast Iowa this morning. Another chance before the end of the week. Could see as much as an inch of rain here in northeast Iowa by the time we get to the weekend. So, but the above normal temperatures are sticking around in the outlook, and we're just kind of hoping that we're going to get that 6 to 10 day update, and it doesn't really act like it's going to happen for us, does it?
An inch of rain would probably soak right in, right? I don't imagine you're all that frozen.
Oh no, that would it would go straight in the ground. There is no question about it. No question about it that it would go straight in the ground.
Like a sponge.
Yep. Last week, USDA Secretary Tom Vilsack, EPA Administrator Regan disappointed the attendees at the Commodity Classic and did not give us an announcement of the decision on the GREEP model. We're going to talk with Emily Score from Growth Energy about that tomorrow morning, and we'll get a download from Wiesmeyer right here on AgriTalk.